How can a digital coin, born from cryptographic genius, become the cornerstone of a financial revolution? Bitcoin isn't just a currency, it's a paradigm shift with the power to outpace inflation, challenge traditional systems, and soar past 100K. This video uncovers the unstoppable forces driving Bitcoin to unprecedented heights. Let's explore what drives Bitcoin's value beyond 100K. The first thing that makes Bitcoin unique is its scarcity. Unlike fiat currencies that can be printed endlessly, Bitcoin has a fixed supply of 21 million coins. Over 19 million of these have already been mined, and with each passing day, the availability diminishes. This limited supply creates a natural scarcity, similar to gold but with one key difference. Bitcoin is digital, borderless, and divisible to the smallest fraction. This scarcity makes it a powerful hedge against inflation and a potential store of value. Another critical factor is Bitcoin's decentralization. Unlike traditional currencies managed by central banks, Bitcoin operates on a decentralized blockchain network. This means no single entity, government, or corporation controls it. This independence protects Bitcoin from manipulations like devaluation or seizure, ensuring its intrinsic value as a financial asset. At the core of Bitcoin is the groundbreaking blockchain technology. Blockchain is a secure, transparent ledger that records all transactions. Its design ensures that Bitcoin is immutable, tamper-proof, and secure. Combine this with the proof-of-work consensus mechanism, which requires miners to solve complex mathematical problems, and you have a network that is both robust and reliable. Bitcoin's intrinsic value is derived from its utility and adoption. Unlike gold, Bitcoin can be transferred instantly across the globe without intermediaries. Its programmability also allows it to be integrated into various financial systems, from decentralized finance (DeFi) platforms to payment networks. Finally, when compared to traditional assets like gold or fiat currencies, Bitcoin stands out. Gold is heavy, hard to transport, and difficult to divide. Fiat currencies, on the other hand, lose value due to inflation. Bitcoin combines the best of both worlds, the scarcity of gold with the efficiency of digital money, making it a truly revolutionary asset. Why do analysts predict 100K and beyond for Bitcoin? One of the key reasons analysts are so bullish on Bitcoin is its halving cycle. Every 4 years, the reward miners receive for validating transactions is cut in half, reducing the rate at which new Bitcoins are created. This event, known as the halving, creates a supply shock that historically triggers massive price rallies. For example, after the 2016 halving, Bitcoin's price surged from $600 to nearly $20,000 in just over a year. A similar pattern followed the 2020 halving, with Bitcoin reaching an all-time high of $69,000 in 2021. Institutional adoption is another game changer. Companies like Tesla, MicroStrategy, and Square have invested billions in Bitcoin, signaling confidence in its long-term potential. Additionally, the rise of Bitcoin exchange-traded funds, or ETFs, make it easier for traditional investors to access the market. As more corporations and banks integrate Bitcoin into their strategies, demand continues to grow. Bitcoin has earned the nickname digital gold because it shares many of gold's best qualities while introducing even greater advantages. Like gold, Bitcoin is scarce. It has a fixed supply of 21 million coins. The scarcity makes it a strong store of value, especially in times of economic uncertainty. But unlike gold, Bitcoin is incredibly easy to move and divide. You can send a fraction of a Bitcoin to someone across the world in minutes, something you definitely can't do with a bar of gold. These features make Bitcoin not just valuable, but also practical for the modern digital economy. At the same time, retail investors are playing a huge role in Bitcoin's growing popularity. The fear of missing out, commonly known as FOMO, has driven millions of people to explore and invest in Bitcoin. Platforms like Robinhood and Cash App have made buying Bitcoin as easy as tapping a button, removing barriers for everyday people. As more investors jump on board, Bitcoin adoption is accelerating rapidly. This growing interest creates a strong foundation for Bitcoin's price to climb even higher. It's not just about big institutions anymore. Retail investors are shaping Bitcoin's future in ways that were unimaginable just a few years ago. So, how will Bitcoin surpass 100K? The mechanisms driving Bitcoin past $100,000 are rooted in fundamental market dynamics. The halving events, for example, reduce the influx of new Bitcoin into circulation, creating a supply shock. As demand remains steady or increases, prices are driven even higher. Adoption plays a pivotal role as well. The number of Bitcoin wallets and active nodes continues to rise, indicating a growing user base. As more people adopt Bitcoin for transactions, savings, and investments, its utility and value increase. Moreover, advancements like the Lightning Network are enhancing Bitcoin's scalability, allowing for faster and cheaper transactions. Regulatory frameworks also influence Bitcoin's trajectory. While some countries impose strict regulations, others, like El Salvador, are embracing Bitcoin as legal tender. Positive regulations can boost investor confidence, while restrictive ones may temporarily suppress prices. Over time, however, Bitcoin's decentralized nature ensures resilience against regulatory pressures. Bitcoin's mining difficulty is another factor to consider. As mining becomes harder, it requires more computational power and energy, making it less profitable for miners. This naturally limits the supply of new Bitcoin, further supporting price appreciation. Technological improvements such as Layer 2 solutions and DeFi integration are also driving adoption. These advancements make Bitcoin more accessible and practical for everyday use, increasing its appeal to a broader audience. When will Bitcoin cross 100K? Predicting an exact timeline for Bitcoin to cross $100,000 is challenging, but historical patterns provide some clues. Past halving cycles suggest that Bitcoin's price typically peaks 12 to 18 months after a halving event, with the next halving scheduled for 2024. Analysts believe a breakout could occur by late 2024 or early 2025. Institutional adoption is another critical factor. As more corporations and sovereign wealth funds enter the market, Bitcoin is likely to experience increased demand and liquidity. Finally, Bitcoin's potential as a mainstream payment method could accelerate its rise. As more businesses accept Bitcoin for goods and services, its utility as a currency will complement its role as a store of value, pushing prices higher. Where will Bitcoin's biggest impact be seen? Similarly, in regions with high inflation, such as Argentina and Venezuela, Bitcoin offers a stable alternative to collapsing fiat currencies. In the financial sector, Bitcoin is revolutionizing remittances by enabling faster, cheaper cross-border transactions. Traditional banking systems are being challenged by Bitcoin's efficiency and accessibility, particularly in developing countries. Innovation within Bitcoin's ecosystem is another area of impact. Startups and developers are building new tools and platforms to enhance Bitcoin's functionality, from payment systems to decentralized finance solutions. Bitcoin mining is also undergoing a transformation, with a growing focus on renewable energy. Countries with abundant renewable resources, such as Iceland and Canada, are becoming hubs for sustainable Bitcoin mining operations. Resistance, however, remains in regions with strict regulations or outright bans. Despite this, Bitcoin's decentralized nature ensures it continues to thrive, even in restrictive environments. Who are the key players in Bitcoin's journey to 100K? Several influential individuals and organizations are shaping Bitcoin's path to 100K. Michael Saylor, CEO of MicroStrategy, has been a vocal advocate, with his company holding over 150,000 Bitcoins. Kathy Wood of ARK Invest is another proponent, predicting Bitcoin's price could reach $1 million in the coming decade. Critics, however, argue that Bitcoin's volatility and environmental impact are significant concerns. Despite these objections, the resilience of Bitcoin's community and advancements in renewable mining solutions address many of these issues. Large Bitcoin holders, known as whales, also play a role in price volatility. Their buying and selling decisions can influence market dynamics, but their accumulation patterns often signal confidence in Bitcoin's long-term potential. Governments and institutions shaping policy decisions can impact Bitcoin's adoption rates and market sentiment. However, decentralized governance ensures that no single authority can derail Bitcoin's progress entirely. Why $100,000 is just the beginning. Bitcoin's journey to 100K is not a question of if, but when. With its limited supply, institutional adoption, and technological advancements, for those considering entering the Bitcoin market, understanding its unique attributes and long-term potential is crucial. The convergence of scarcity, utility, and adoption creates a perfect storm for growth. Whether 100K, 500K, or even $1 million, Bitcoin's story is just only beginning. So, what do you think about Bitcoin's future? Will it surpass 100K soon, or do you see even greater heights ahead? Share your thoughts in the comments below. Don't forget to like, share, and subscribe for more in-depth insights into the world of cryptocurrency and blockchain.